All right, welcome to The Explainer. Today, we're going to dig into something pretty wild. The story behind gold's absolutely insane prices. And listen, this isn't just another market rally. It's way bigger. It's about a quiet shift in global power that's happening as we speak.
I mean, just look at this. Gold has been on an absolute tear, just smashing records left and right. We're talking about it trading near $3,600 an ounce. Unbelievable. Just this year alone, in 2025, its value has shot up by an incredible 37%. But here's the kicker. This isn't being driven by you or me, the everyday investors. So you have to ask, what's really behind this modern-day gold fever? Okay, so let's get into the players here. Turns out, it's not the usual suspects pushing the price this high. Nope, there's a much bigger and honestly much quieter force at play, and they are buying up the world's gold at a pace we have never seen before. So who are these mysterious power buyers? You know, your first thought might be, oh, it's got to be hedge funds, right? Or maybe some secretive billionaires. But the real answer? It's even bigger than that. We're talking about the world's central banks.
Yep, you heard that right. The very institutions that guard entire nations' wealth, they're the ones on this historic gold-buying spree. They are snapping up physical gold at a rate we have not seen in decades. One source I read even said they are gorging on it. And that's a pretty strong word.
Now, this isn't totally out of the blue. For centuries, gold has been the ultimate safe haven for central banks. You can think of it as a nation's ultimate financial safety net, that bedrock you hold on to when things get shaky, protecting you from economic shocks or, just general chaos. And when I say they're buying a lot, I mean a lot. For the past 3 years in a row, they've collectively bought over 1,000 metric tons of gold each year. To put that into perspective for you, that's more than double the average for the entire previous decade. That's a massive acceleration. Okay, so this brings us to the real heart of the matter. Why? Why this sudden huge shift into, well, an ancient rock? This isn't just about hoarding a shiny metal. No, this is a calculated, strategic move, and it has massive implications for all of us. And when you start to unpack the reasons, it really paints a picture of this deep, growing nervousness about the way the global financial system is set up right now. This isn't just a random trend, it feels much more like a reaction to something. And really, it all boils down to a few key things. But the big one is this trend called de-dollarization. Basically, a lot of countries, especially the big emerging markets, are trying to depend less on the US dollar. They're looking for ways to hedge against high inflation, protect themselves from all the geopolitical drama, and maybe most importantly, shield their national wealth from the threat of sanctions. Now, all of this intense buying has led to something truly historic. We're talking about a fundamental reshuffling of global wealth, the kind of thing we haven't seen in almost 30 years.
What we're seeing here is basically a quiet coup happening inside the vaults of these central banks. An asset that's been around for thousands of years is literally taking back the throne from the world's most dominant currency.
And here's the proof in the pudding. Look at these numbers. For the first time in decades, the total value of all the gold held by central banks has officially overtaken their holdings of U.S. Treasuries. It's now $4.5 trillion in gold versus $3.5 trillion in U.S. debt. That is a massive flip.
And this chart really drives the point home. If you think of global reserves as a big pie, gold's slice is now bigger. It accounts for 27% of the whole thing, while U.S. Treasuries have actually shrunk, falling from over 30% just in the last decade.
And listen, experts are taking notice. Guys like Tavi Costa from Crescott Capital are saying, look, this isn't just a blip on the radar. What we're seeing could be the very beginning of a major long-term shift in how countries manage their money and, assert their financial independence.
So that all leads us to the million-dollar question, or maybe the trillion-dollar question. What comes next? Is this global gold rush going to keep going, or are we about to see it cool off? Well, there are really two sides to this. On the yes side, all those reasons we talked about, the move away from the dollar, global tensions, those aren't going anywhere fast. But on the maybe not side, gold has a big drawback. It doesn't pay you anything to hold it. It just sits there. So if the US dollar gets stronger or interest rates stay high, holding cash might start to look a lot more appealing than holding a lump of metal.
But at the end of the day, this whole thing is about so much more than just the price of gold. What we're really seeing is a deep, profound rethinking of what it even means to be financially safe in this crazy, volatile world. And the most powerful financial players on the planet are sending a very, very clear signal.
And that's what I want to leave you with. This huge, quiet stampede
back to the world's oldest form of money. It isn't just a market trend, it's a signal. So the question we all have to ask is, as the world's most powerful banks turn back to gold, what exactly are they preparing for?